What's up, guys? This is Max here, Madaz, coming at you guys with some more free, awesome content here on YouTube. And today I'm going to talk about a couple of things. First thing I want to talk about is I recently introduced a new feature in my videos. I don't know if you guys notice it, but it's this thing what YouTube calls annotations. So it's like a caption that pops up, and I put what I call pro tips in there, and it's basically highlights what the main point I'm trying to get across in the video. So do turn those on, and if you don't see them, I don't know if there's a switch for you to turn them on, but I have them on my videos by default. And I'm not sure if mobile apps, the YouTube mobile app, can see it, but if for sure, if you want to see them, go watch the video on your computer so you can actually see all the annotations that I put in the video, so you guys can get extract the main ideas from the long videos that I occasionally make. So do turn those on, and hopefully they'll help you guys better understand what the video is about. Okay, so secondly, I want to go ahead and briefly talk about the very slow day today. I mean, I took a nap for like 2.5 hours, my longest trader nap for like a very long time. But overall, the market was pretty slow. Nothing really interesting popping up in the pre-market scanners in the top list. Usually, when you see the top list populated by a bunch of blue chips or large cap stocks and no small cap stocks on the list, usually that indicates that it's going to be a pretty slow day. So that's exactly what happened, and I managed my expectations accordingly. Took the expected small profits and ended up with small profits, and pretty much just called it a day, and made pretty much only 2 trades after 10:30 Eastern time. So, and you can look at the SPY chart, pretty much indicative of how slow it was. I mean, it was stuck in this $1 range from pretty much 10:45 all the way until the last 15 minutes of the day. So really glad I used the bulk of this sideways consolidation action to catch up on some sleep and not force trades. And I was stressing that on Twitter. So hopefully I made that point loud and clear, and you guys didn't chop yourselves up and just lose money pointlessly. So the video today is going to be a two-part double feature. I'm actually going to split the video later on because they're actually 2 separate topics that are not really related. So I want to split them up into 2 videos. So this first video is going to be about UVXY, and I did say that I was going to make a video last week. You guys wanted to see what I had to say about UVXY, so I'm going to go ahead and talk about it briefly today in this video. So UVXY, it's the 2x double leverage, what they call ProShares Ultra VIX short-term futures ETF. So basically, it's a double leverage. It's supposed to return 2 times as much as the VIX, the VIX futures index. And it's a misconception that a lot of people think that this thing follows the SPY inversely, but that's actually not true. It actually follows the VIX. So do make a note of that. There are slight deviations. Although the VIX is generally believed to be the inverse of the SPY, generally speaking, it is true. However, sometimes there are slight deviations, and I'm going to go ahead and talk about that in determining how UVXY behaves relative to the SPY and everything else. So let's talk about UVXY and go ahead and just look at the longer term chart to illustrate the point. The reason why I'm making this video is so you guys can understand how UVXY works. A lot of people are very confused. Not sure how UVXY, sometimes it trades very strangely once in a while. This video is to clarify that. So UVXY, like I said, it follows the VIX. So let's just pull up a long-term chart for the VIX and UVXY, and you'll notice something very peculiar in that both the VIX and UVXY, they both have a floor. Okay, so UVXY pretty much never goes below 24-ish. Okay, 24, 25. You could draw like a little support line right there to see. It's pretty loud and clear. And on the VIX, this corresponds to about 12. It did go below one day here on this wick, but generally speaking, the VIX never goes below 12. And even more recently, it didn't even tap 12. it was trading around 13, even 14. So why is this important? So we all know that the VIX is also known as the fear index. So it's driven by market fear. But however, when the market goes up to a certain point, pretty much the VIX just once it hits that floor, it just stops going down. And it's very important to understand this because a lot of people, I've seen a lot of people attempt to short UVXY when it's trading around 25, 24, and there is no risk reward for that. I mean, just look at the long-term chart. This thing doesn't go below 24 that often, and if it does, it only goes down for a little bit and it springboards back up. That's just the way it works. Okay, so UVXY, as it approaches 24, it becomes a very poor risk reward short. And I'm not saying that you can't scalp it, but you're pretty much better off going with the long trade, because as UVXY approaches 24, which corresponds to the VIX level around in this case around 13, 14, and 12, that's when the short trade becomes very difficult. You're going to start feeling like there's like a magnet that keeps going against your trade. It keeps pulling the trade in the opposite direction of where you're trying to go. So when UVXY approaches 24, it becomes very sensitive to going up, which means that if the market starts showing any sign of weakness, UVXY it's gonna move up very, very quickly. So if you're in a short position and the market is kind of going down gradually, it's gonna go against you very hard, a lot more faster and stronger than it would if it was trading at, say, $30, $40, $50, $60. Okay, so everyone understands that UVXY is a stock that it's not a stock, it's an ETF that inevitably will go down in the long run because the long-term market trend is up. Okay, and UVXY, when it goes down enough, they usually end up just reverse splitting it. And supposedly the rumor is it's going to reverse split next year, sometime in the summer or late summer, early fall, and they're going to do like a 5-to-1 split on it. But everyone understands that the premium decay on UVXY is always going to cause it to go down because the market is always, in the long term, the bigger picture is always going to go up. So it's really important for us to understand that the edge for UVXY only exists when the market is facing some sort of extended period of downtrending action. So for example, when we had the SPY little scare, in August, and then when it started kind of going sideways in late September, and then it finally started to find a bottom, and it started grinding back up in October. And then if you look at UVXY, that's when UVXY went crazy, right? Makes sense because it's the fear index. People were scared that the market was going to tank and that we were going to possibly enter another bear market. So people got scared, and UVXY pretty much rocketed off of its little 24 floor all the way up to the 90s here on September the 1st. But however, once the market kind of found its bottom and started grinding up very gradually over the next couple months, you see that UVXY just resumed its fade back to oblivion where it pretty much came from. Okay, so if you look at this chart, UVXY, it goes up very, very quickly when the market shows signs of weakness, especially when this thing pretty much SPY dropping from 210 down to 182. That's pretty much a huge move to the downside. That's why we saw a corresponding huge move on UVXY. So during this time, this is where we can find a lot of edge trading UVXY because there's a lot of fear. And when there's a lot of fear and emotion, we can find an edge in that. Okay, once UVXY starts going crazy like this, there's going to be a lot of range. You can see the size of these candles. These are candles that are pretty much indicating there are a lot of opportunities on these days. And even when UVXY is still going down on its downtrend as the market is gradually going back up, as long as UVXY is well off of its 24 floor, trading in the 40s, 50s, 60s, we're going to get big candles and we're going to get some nice range on these days. Okay, and we're still able to find an edge because there's still premium and decay fighting each other, as long as we can figure out, at least for that day, which direction it has an easier time going up. So either premium accumulation to the upside or premium decay to the downside. We can successfully trade UVXY because there's actual range, and range indicates risk reward. Okay, and that's very, very important. So UVXY, it's pretty indicative that as long as it's trading pretty much well off of this 24 floor, there's going to be good range for us, which means more opportunity. So that's why I was able to make so much money on UVXY during these months of August, September, and so on. As if you guys follow me on Twitter, it's because the range was sufficient and the risk reward was there. As long as you're able to predict which way this ETF UVXY had an easier time going up or down, and you're not caught on the wrong side of the street, you should be fine. Okay, so when the market finally decided to go up and the fear kind of tapered off, eventually going back to where it was, VIX going back down toward 12, 13. Okay, we can see that UVXY, the range pretty much progressively over time became non-existent. And by that, I mean it pretty much eliminated the edge for us to pretty much trade UVXY and expect a reasonable amount of profit trading it. You're better off probably finding better risk-reward setups elsewhere other than UVXY after it pretty much found a floor at 24. Now, you can still trade this, but you got to understand that if the market keeps going up, this thing is just going to go sideways around 24. However, if there's any sort of dip in the market, this thing is going to rocket back up again. So, for example, when the market pretty much took a little bit of a dip here from 211 back down to this 202 test right here, we saw we could see a little bit of a pop on UVXY. Little 3-day pop there off the lows here. 24, 25, 26, up to almost 40 again, 37, 38. So we can see that UVXY, when it's pretty much flooring around 24, it has a very difficult time going down, but it has a very easy time going up. So if I'm trading UVXY on these days, I'm going to be looking for a long on any sort of market weakness. So if the market is weak on a certain day, then we should expect UVXY to be very sensitive to the upside, like I said earlier in this video. So overall, the point I'm trying to get across is if UVXY is converging toward 24 and it's pretty much flatlining toward 24, the only decent risk-reward trade that you should be looking for on UVXY is the long trade. Okay, the long trade, as long as the market is displaying some sort of weakness. Okay, that doesn't mean you just blindly go long if the market just keeps tanking. You don't do that either. You gotta wait until the market is showing some sort of sustained weakness, and that should trigger some move to the upside on UVXY. So, for example, today, if we look at the UVXY chart just for today, intraday, and we look at the intraday chart for SPY, we see that SPY at the open went from 209.20s down to 207.20s. So pretty much a 2-point move on the SPY downward. And we can see that that corresponded to a pretty nice move from 25, just below 25 on UVXY, 24.80s, and all the way up to 27. So that's a pretty nice move. And the market pretty much wasn't down that much today. The market today closed down 1% here. And by the market, I mean the SPY. But UVXY at one point was up almost 10%. So that just shows you how sensitive it was to the upside. And there was definitely opportunity there if you took that trade. And then it also signifies that you definitely should not have been attempting to short it. So UVXY, like I said, it's a tough risk-reward trade if you're trying to short it. It's a good risk-reward trade if you're trying to go long. As you can see, even though the market was kind of going sideways, UVXY was kind of perking and trying to make new highs, and it actually did make a new high very briefly here at the end of the day, hitting a high here at, looks like 27.7s. And the market pretty much finally decided to pick a direction late in the day, and it went up, and it became clear that the market was gonna grind back up toward the end of the day in the last hour or so. So that's when the fear kind of exited. So that's when it finally decided to drop, when it was pretty obvious that the market was going to recover to the upside and break out of this little $1 channel that it was stuck in pretty much for the entire day. So that's pretty much UVXY's behavior in general. Just understand that as long as UVXY is trading sideways toward 24, and as you can see based on the chart, UVXY is always going to converge toward 24. No matter how far it pops back up, it's going to converge towards 24 as long as the market starts going sideways and then starts grinding back up. That's when the fear starts exiting. UVXY starts converging toward 24, and that's when it pretty much has no good risk reward trade for the short side, and it's going to be very sensitive to the long side. So look for long trades on any market weaknesses as long as UVXY is trading around 24. If UVXY makes a pop and goes crazy again, goes over 40, 50, or 60, then we can see some better risk reward setups both ways. Just make sure you observe which direction it has an easier time going. So either premium accumulation on the upside on market weakness, or premium decay on the short side on some sort of market movement to the upside. Okay. So that being said, guys, hopefully that kind of explains how UVXY works a little bit better. I really don't want to see people being confused about why they're trying to short UVXY in the market. It's grinding down or going sideways, and UVXY is not going down, and they took a short at 25, it's not going down, or they took a short at 24, even worse, and they're just UVXY is just somehow going up even though the market's going sideways. I really don't want people getting stuck in that kind of scenario. So just understand how it works, guys. It converges towards 24. It has an easier time going up at this level. So just wait for any sort of pop for the short trade to come up again for a good risk reward setup on the short side. For now, for the most part, I'm just going to be looking at the long trade on UVXY as long as it just stays around here. All right, guys. So that concludes part 1. So I'm going to go ahead and move into part 2.